All right, so here's my advice to fellow traders out there, those that trade the futures. If you are really interested in trying to succeed and make money in this business, trying to obtain a goal of becoming financially free, meaning being cut from the ties of having to work a 9 to 5 and being tied to a desk or a shift level job, or maybe you just want to change in life, or maybe you just want to make some extra income. So anyone that's looking for financial freedom and basically starting a business for themselves and becoming their own boss, I will say this. First and foremost, stop chasing the markets. If you're taking bad trades, stop chasing every single trade. If you see the market pushing in one direction, you're jumping in a trade or moving either up or down. Wait patiently for setups to unfold. You must have not only a trading plan, but a strategy put in place to be able to trade the markets correctly. But the most important piece of advice I can give to anyone that's starting off their journey into wanting to trade futures, this advice, now here it is to master market structure. Understand the structure of the market, because it's going to help you understand how the market's moving, the flow of the market. You have to be able to trace things with your eyes visually to see, is the market making higher highs and higher lows, breaking structure to the upside, or is it doing the opposite to the downside? Because we know the market can reverse at any given time. So you have to master market structure. I've been beating that to death, that term, and I will not stop doing it. I'll continue doing it for I don't know how long, but I'm telling you that is the most important thing. So heed to what I'm trying to say. Market structure. If you think you know it and you maybe be failing at trading and becoming successful, maybe you making money one week and then you're down the next week, go back, take a look again to see if you understand it or know what you're looking at the correct way. All right. Now, not every trade is going to work out, so you have to understand that as well. But trading's risky. But in this business, you have to practice proper risk management. This is a risk management style type of business, to where when it comes to, we're dealing with money and we're dealing with opposing forces that we don't want to go against. We want to be able to trade with them and be able to see things correctly. So heed to what I'm trying to say about market structure. But for all my fellow future traders out there, please stop chasing trades. Stop jumping to and in and out of trades left and right. All right. You're going to end up blowing your account by doing that. Take smart setups. What I have put in place for myself, and I told myself what I'm going to start doing at the beginning of this year, and just moving forward, I was going to limit the number of trades that I taken. Okay. So instead of taking, 4 and 5 trades, I'm just looking for 1, 2 high quality setups. And here on this channel, I talk about the strategy and how I actually trade. I like to use multi-chart confluence, meaning marking zones from a higher base chart, but then moving down to a lower base chart. And so if I got a demand setup that I saw on a higher base chart, or the market is tapping into a demand zone on a higher base chart or a higher time frame, then I want to follow suit and looking for a demand setup or demand zone setup over on my lower base chart. That's giving me confluence across 2 charts. It's giving me confirmation to getting to the trade without much risk. It's a higher probability chance the trade is going to work out in my favor. And I talk about the series or just the simple steps of things that I look for when it comes to confirmation, the rejection, to be able to get into a trade. And if it doesn't work out, of course, you should already know before you get into the trade where your idea of stop is going to be, meaning where your jump out point is going to be, so you can get out the trade quick enough. All right. Lots of times the trade don't work out. You cut it early to protect your capital so that the market doesn't give you a full on stop, and you actually take on more drawdown and you lose more money. Okay. But that's the reason why you should always size the market up, like I talk about, and get out of a trade early enough. So what I want to say too, a piece of advice that I'm not telling anyone to follow this, okay, but it's just something that I kind of put in my own trading plan in helping build an account and compound an account, is never, or I should say this, try to trade when you're trading. Don't risk more than 5% of on a trade, meaning 5% of whatever your account is, your live account, because that's what we're talking about here. Prop firms may be a little different, maybe not. I mean, I'm not sure, because I don't trade. I never traded prop firms, but even if you I guess if you're trying to pass a $50,000 or $100,000 valuation, you pass it. You got a funded account. Even with that, a 5% risk. So what I'm trying to say is your max loss of 5% and be done. Okay. So if you tapped out on the day of losing at least 5%, and then just live to see another day and make that up the next day and some to recover from that. All right. So 5% is it will preserve and protect your trading account. So for example, if you have started a live account, a personal account with $5,000, just showing this for an example, and then we say times 5% is what we're going to risk on any given trade. All right, and that's going to be $250. So that what we're saying is I don't want to risk more than $250 on a trade. Okay, and maybe take 2 trades a day or whatever the case is. So that's going to be what, like $500 or whatever it is. Possibly. I'm just speaking hypothetically in terms of don't risk more than 5% on your trades. If you're doing more than that, then basically you're going to start depleting your account quicker at a faster pace. $250, if you take a loss on, you can make that back up. All right. You just, the next trade, make that and then possibly have a runner where you can make some more money. So we're looking at compounding an account, and this helps protect a max loss of only 5% against the account. Again, so that if you take a $250 hit, then you can make that back up. $250 is not going to affect a $5,000 account. Now, this is someone that's more so probably trading like the E-minis or maybe even trading the micros. But if you're someone that's trading, smaller size accounts, maybe $1,000 or less or $1,500 or less, I would truly focus in on trading the micros. All right. And the reason why I say that, it's a great opportunity. The margins are lower for one. The tick values are smaller, so you're not going to make as much as quickly as you would trading the full-on E-minis. But smaller accounts, it still gives you opportunity, right, to be able to trade versus not being able to do so at all. So with the micros, you can do that on smaller size accounts, risking 5% the same way. Okay, it's all about compounding that account. Have a set percent in place so that it's using it as a means of protection. All right, in case that you start taking on, have a loss to on a trade, and then the next trade you make it back up and hopefully move on. But what I'll say too is, like, if you always have a stop limit, meaning in place mentally in your mind. What I'm trying to say, knowing when to stop trading. You may be asking what I'm talking about when I say stop limit. I mean the number of trades in which you're going to say I'm done for the day. For me, it's no more than 2 trades a day. The more you stay into the markets, then the higher the risk you're taking as far as taking bad trades. All right. So that's why I like to trade pre-market, because a lot of times the market likes to fall in the intended direction that it's moving. But you gotta be careful because we do have major news events most times in the morning around 8:30 in the morning. So but pre-market session, the market does kind of move in its intended direction. Or once the market opens up at 9:30, the New York session opens up, wait out a little bit, because typically the first good setup after the market opens up, not immediately after the market opens up, but wait for the volatility kind of slow down to look for a one clean, good setup, because at some point after about 10:30, 11 o'clock, the market kind of tends to like to go the opposite direction or reverse for a period of time before it kind of follows suit in which direction it's going to probably continue throughout the rest of the day. But so yeah, you just got to be very careful when it comes to actually trading with your funds and knowing how much you're willing to actually risk. And I'm telling you, 5% is or less is a decent amount. You start going over that, then you're going to start tackling on or taking on more hits against your account, and then you're going to blow that account. I see that happen all the time when people start risking 10%, 15, 20%, and then the next thing you know, within less than a week, their account is blown. And and that could be a lot funded personal account, meaning money you put into your own account, or a funded account from where you pass an evaluation. Those companies or prop firms, they want you to fail. That's their goal. That's how they're making their money, because you're giving them money each time you have to go back to the table to reset, I guess, an evaluation or purchase a new evaluation. And then they're also making other money, I hear, from certain companies. Once you pass the evaluation, you got to pay other fees. All of them are different, whatever the case is. I don't trade those. I've been trading for my own funds since day one. And I highly recommend anyone out there that is right now taking payouts or withdrawals from these prop firms. Don't just think that that's going to be your gravy train and you're going to just do it forever like it's an ATM machine. Look, take that money and put it into a personal account and maybe trade both. start funding your own live account, and then taking payouts, moving over to a live account, and then continue making money from the prop firm, and then building that up as well. So maybe Monday you trade your live account, Tuesday you trade the prop firm account, whatever. So kind of playing in between the middle both ways and making money both ways, but mostly the money you're making from that prop firm, take withdrawals, a percentage of it, or a big percentage of it, and put it into your live funded account. That way you're quickly building that account for your own means, your own account, because that's where you're ultimately going to be making the big bucks, where you're making the money from, to where you're not having to pay any part back to a prop firm. So that's just my tidbits of advice that I want to give to any future trader out there that is really seeking or trying to become financially free. You want that financial freedom piece to become independent on your own and to be able to survive in this business. All right. So you just have to know, put some parameters in place and measurements in place for yourself to safeguard your account. That's what I'm trying to get at here. But that's all I want to share today. So again, stop chasing trades, look for high probability setups. For all those that are not current subscribers, first time viewers, please take the time to go ahead and sub by clicking on the subscribe button down below. Make sure you turn your post notifications after clicking on the subscribe button so you never miss one of the uploads here on the channel. I got tons of video, tons of valuable content right here to where I discuss a simple strategy and how I trade the future markets. It doesn't matter if you trade the the indices or maybe even one of the commodity markets or currencies futures. So there are great instruments or contracts to trade within futures. Just figure out your poison of choice, I would say. Just being funny there, but anyways, figure out which market you want to trade. Primarily I trade the indices mostly, and that's most like the NASDAQ and the ES, and so the equities in a sense. But outside of that, if you would like to join and become an elite member, what is an elite member? But I'm saying this because people always send me DMs. It is a tier-based program. It's a program to where you gain access to the trade breakdowns, where I walk you through in depth the trades that I take, the same trades that I post over on the Discord. I've got plenty of videos that already exist there to where I talk about stop loss placement, what to position your profit target at, and things of that nature, and just giving you the rundown of the trades. What was I thinking leading up to, or why I took certain trades? And it's helped people tremendously in their own trading to understand, especially when it comes to trading range bars. Or maybe just doesn't really matter. It's just a means of, it doesn't matter if you trade time-based or volume and tick. But here I trade range-based charts. So, I don't trade time-based charts. And there's no significant reason why. It's just the range bars are just cleaner to the eye to me, those range charts. So if you trade time-based or volume and tick, that's fine too. But I'm just telling you that if you become an elite member, it's only $6.99 a month. You get the trade breakdown videos, you get the video playlist, and then from time to time I'll put other videos out there, like I did one on market structure, a great video. But it's just a very inexpensive fee of $6.99 a month, not a day, not a week. That's monthly. Most of you guys pay probably more than that, than a price of a cup of coffee on a day or any beverage of your choice. But I'm just telling you that because people always ask me, how can they join? That link is down in the description portion of the video. There's two links there. The first one's the Discord. You can join that for free. The second one is the becoming an elite member. Once you click on that second link that says become an elite member, you'll see two tiers that'll pop up. The second one, it shows $6.99. That's the one you want to choose, and you'll gain access to it immediately. Outside of that, that's all I have for you guys today. If you found value in today's video, and the piece of advice, the tips that I've given this video, I really appreciate it if you drop a like on the video. Take care and see you in the next one.